The 990PF, which is the tax return for private foundations, is a specific return that very few people know how to actually file. This video is going to be breaking down the 10 most common issues I see with 990PFs. I am the weirdo that goes and looks at the 990PFs. That is a misnomer in this world that a private foundation is private. The tax return is actually a public record where you can go out and look at the 990PF of any foundation. After we go through the 10 common mistakes, I'm going to go look at two different tax returns. One that was done very well, one that was done not so well. We'll do kind of like the teaching to begin with, and then we will go into and see the actual applicability. For those of you that don't know who I am, my name is Daniel Kaminsky, and I help families, individuals, corporations set up and manage private family foundations. I started a company called Foundation Launch to help facilitate that. My goal with this channel is to provide education so that I can better support people that I work with as well as those that I don't know yet. So the 990PF is due each year on May 15th for foundations that have a calendar year filing, which is the most of them. For this video and pretty much any video that I do, it's going to be in specific relation to what's called a non-operating foundation, which means that foundation makes grants to public charities and isn't doing its own charitable programming. And the vast majority of non-operating foundations are as, quote, simple as writing checks or grants to 501c3s and things like that. The first mistake is missing information. The 990PF is quite a long form, and there's a lot of different checkboxes and fields and things like that. One of the easiest things to determine if it was done properly or not, which if you have a private foundation, I suggest you go look at your tax returns, is that there's information missing. Now, how do you know what's missing? We'll go into that. But the problem with missing information is the IRS would consider a foundation that filed a return, but it was incomplete, missing information, had wrong information. They would consider that to be non-filed. And the problem with being non-filed is that it accrues a penalty, which for most private foundations, the penalty for non-filing is $20 per day up to $10,500, or 5% of the gross receipts, whichever number is smaller. For larger foundations that have gross receipts of over $1 million, the penalty is $100 per day up to $50,000, and or 5% of the gross receipts, whichever is smaller. This is per return. So I've seen certain cases where foundations have been doing the tax returns wrong for a number of years. If they were to be audited, they would consider that those returns were non-filed for a number of years. So that could be 10,500, 10,500, 10,500, and suddenly we run into quite a bit of fees just from a non-filing. There's also potential penalties to the foundation managers if they're willfully providing incorrect information. The second most common mistake is filing the wrong form. So with 501c3s, you have the general 990, you have a 990EZ, you have a 990N. The one that you're hearing over and over that we're talking about is the 990PF. The way to know what form you're supposed to file is based on your IRS determination letter. In most cases, you're going to know that you are setting up a private foundation versus a public charity. However, you may not. The way to know for sure what you should be doing is based on your determination letter. So if we take a look at a determination letter for a private foundation, you're going to see in two spots, it says Form 990PF required, yes, and you're required to file Form 990PF, return of private foundation. So that's the best way to know that you should be filing a 990PF. And if you're not, then those returns have to be amended. I just had a foundation recently that their first return was a 990, and then subsequently when they switched accountants, they did the proper one, 990PF. But really that first return should be amended and be a 990PF. For the remaining 8 mistakes, we're going to go look at the 990PF. This is for 2024. And I started off by highlighting all the sections that need to be filled out. And I realized that it's actually the inverse makes more sense because so much of this return needs to be filed. So I highlighted in purple the areas that don't need any information, typically for non-operating foundations. And so as you see, as I scroll down, there's very little. There's this line 3. There was that column C on the first section. And all this information needs to be filled out. It's part of the reason why I highly recommend that you have a professional fill this out. This section, the private operating foundation, again, difference between non-operating and operating foundation is a non-operating is not going to be doing its own charitable programming, whereas the operating foundation would be like a museum or some sort of shelter. So this section would not be required. But everything else needs to be filled out. And this doesn't even include all the schedules. The third most common mistake I see is this little checkbox here. If there are contributions over 5,000 in this box here, then this checkbox should be checked, meaning that Schedule B, the list of contributors, would be included in the return. For example, say $100,000, and yet this box is still checked, meaning that Schedule B is not included, and that's one of the most important schedules. The thing that I want to highlight is that it may seem insignificant that a checkbox here or a checkbox there is not done, but again, in the eyes of the IRS, that is considered to be non-filed, especially in the case of the Schedule B, because they want to know who is making the contributions to the foundation. The fourth mistake is filling out column C here. This is not necessary for non-operating foundations. So this is one of the easiest ways to see if your return is done properly or not, is typically you would see like 10 here, then 10 here, then 10 here. This does not need to be filled out. The only time a non-operating foundation would fill that out is if they had income from charitable activities, which is pretty rare. So this column should not have any values in it. The fifth mistake I see is on the balance sheet. And if we scroll down here to the bottom, you'll see two sections under the net assets or fund balances. More often than not, what happens is this checkbox is checked and there's values here. So we'll just do 1,000 here and 1,000 here. Now, again, we got ourselves a little checkbox, but most foundations are not going to follow the ASC 958. It's typically only going to be for large foundations that require audited financial statements and reside in a state like California or New York. The vast majority of foundations that we work with are going to be under they don't follow it, and the values will be down here. So this is an easy one to be able to tell if your return was done properly or not. The sixth mistake we see is foundations that sell an asset and have a gain or a loss. So if you're going to have something in line 6 here or line 7, that automatically triggers the fact that part 4, capital gains and losses, needs to be filled out. So when we come down here, there should be information here as they have like 200 shares of MLC Co. that would be listed here. It was, previously donated. It was acquired on such and such a date, and it was sold on such and such a date. And then down here, we would see the sales price, the basis, and then what the gain or loss was, and that would coincide with the income part of the return. And it should be transparent because we need it to calculate the 1.39% excise tax on net investment income. The seventh most common mistake is underneath the statements regarding activities. It's this little section right here that says enter the states to which the foundation reports with which it is registered. This is going to be wherever the foundation is established, most often than not. And sometimes a foundation will have more than one state, but by and large, it's going to be one. So like if yours was set up in Delaware, this should say DE. So you have 8A and 8B. And a lot of times we will see that 8B is checked, saying that they did furnish a copy to the Attorney General, which is kind of ironic considering they don't state what state the Attorney General got that copy. So if you don't list the state, it's not likely that you actually provided that copy to the Attorney General. Again, small little thing here, but it's very common not to see it. The eighth most common mistake is something that I'm very passionate about because it has to do with personal information. So here, typically, you're going to be listed as a director. So my name goes here. And then they want to know your address. So I could start typing 1234 Main Street. Let's just say this was my personal address. Most accountants are going to put your personal address here, and it is not necessary. You can put the foundation's address, which I highly suggest you get something like a registered agent, a PO box, a UPS box, a business address, not using your personal address. And that can go across the tax return. So again, very common that they put your personal address here. Also on the Schedule B, which I referenced previously, is the schedule of contributors. So if you contribute $100,000 or whatever dollar amount to your foundation and your name is on Schedule B, again, a lot of times they're going to put your personal address there. If they don't have to, they can use the foundation address. Now, this is the same as up here, and they even state or PO box number. Ideally, you would use a mailbox that is not your personal address because, again, this is a public document and you probably don't want the internet to know your personal address. This is something I'm a big stickler on, making sure that you have some sort of address other than your personal address unless you want it to be that way. The ninth most common mistake has to do with substantial contributors. That means somebody that has contributed more than $5,000 in any given year to the foundation or more than 2% of the overall proceeds of the foundation. This starts with line 10 here. Did any persons become substantial contributors during the tax year? If yes, attach a schedule listing their names and addresses. Again, this is very commonly missed. It's a little checkbox, yes. And then we have to come down this little section here where it says information regarding foundation managers. This is listing any managers of the foundation who have contributed more than 2% of the total contributions received by the foundation before the close of any tax year, but only if they've contributed more than 5,000. So if that line item up there is checked, now we need to come down here. It's going to be the director, the trustee, president, secretary, treasurer, whatever it may be. It's going to be you and your spouse, you and your family, whomever it may be that is making the contributions more than 5,000. Their name needs to be listed here in that given tax year. This does not create a running list. However, you do need to keep a running list as to who are substantial contributors because they become disqualified persons, meaning self-dealing problems come into play and all that kind of stuff. Pretty common to see that somebody made a contribution and that line 10 was not checked, or it was checked, but then they weren't included down here. And it's a quick test to see whether your return was done properly or not. The last mistake has to do with the grants that were paid throughout the year. Let's just say I made a grant to the American Red Cross. They're not an individual. They are a PC, public charity. I gave it for disaster relief. Unfortunately, right now, let's just say it was for the Palisade fires. Put that there, and it was for $10,000. The thing that I'm missing here is the address. This happens very frequently where the address is missing. There's some sort of inconsistencies in the naming of the foundation recipient, the status, whether it's a public charity. Sometimes people say exempt. Sometimes people say 501c3. Really, what you should do is go out and look at what the IRS has considered them to be. It's under the publication 78 data to know exactly what type of recipient it is, because it could happen that what you thought was an organization you could give to technically is not exempt. Happens frequently there too. Same thing here is sometimes people are not descriptive enough. Sometimes they say things that they shouldn't, but in most cases, this is going to say general support and or unrestricted. What that means is that you're not posing any sort of restrictions on the gift that has to be used in any certain way. Now that we went over the 10 mistakes, we're going to look at a return that is done properly. I'm going to use Aaron Rodgers. I'm originally from Wisconsin. Aaron Rodgers was the quarterback for the Green Bay Packers for a long time. He has a foundation here with almost $7 million of assets. This return is being done by Foundation Source, which is another great group that helps people with foundations. And so we're just going to dive right in. And what you'll see is that they put the Foundation Source address. Obviously, this is not Aaron Rodgers' personal address. It's not his phone number. $1 million contribution here. And this is not checked, meaning that Schedule B will be included. There's no information in the C column for adjusted net income, as we would expect. All this other information lines up properly. I guess the other thing here is we do have net gain and gross proceeds from a sale. So that means when we come down, we'll see the activities of that. You will see that they do not follow the ASC 958. So this is checked and it's very clean here. Here we have the publicly traded securities, and these numbers match up to what we saw up above. $3 million gross, $761,000 gain. Here's the excise tax for the foundation. You can see all the no. Yes. They have Delaware. The foundation did have more than 5,000 in assets. Nobody became a substantial contributor because he already was a substantial contributor. Books are held in there. All no. See, these are all filled out. Again, you can see Aaron Rodgers listed as the director and president, not his address. 5% distribution, for those of you that know what that means, is off of that $7 million. The minimum investment return, or the 5% distribution requirement for 2023, was $338,000. The distributable amount is a little bit less, down to $325,000, but he made grants of $1.9 million, so obviously he far outgave. And so on his undistributed income, he actually has an extra distribution of $4.8 million that will go over to 2024. We don't have the 2024 tax return yet. It's not a private operating foundation, so this is not filled out. You will see that he is listed here as a substantial contributor. And here you will see the gifts that he made. So just going with this one here, we've got the hospital. We have the address. It is a public charity. It is general and unrestricted, and for the total dollar amount. And you'll see they are very specific in the way that they do that. As we come down, more no-no-nos, the preparer information. And then we get into the Schedule B. So again, this is a 501c3 exempt private foundation, 990PF. And here we have Aaron Rodgers. This is his registered agent address. He contributed $1 million non-cash, meaning that it was some sort of other asset than cash. If it was just cash, it would say person. And then they list out all of the stocks that were given. And if we just keep scrolling, you can see all the stocks. And as you can see, this becomes pretty extensive. This is a 25-page document, and this is, for most argument's sake, a smaller foundation. Lists all of the stocks that he owns within the foundation. Lists out the other expenses and things like that, investment management fees, so on and so forth. So this is a very well done return. Now we're going to look at a not so well done return. So here we have the Grateful Inspiring Hearts. And as you can see, in most cases, so far, so good. But right away, we have a bit of an issue, is the fair market value of the assets at the end of the year is 0. So that right away should put your spidey senses out. We do have $167,000 contribution. So unless they gave it all away, this should be more than 0. And because they gave money, this should not be checked, meaning that we should know who gave this $167,000. We don't see any other numbers here. It is positive that there's nothing in column C, but there should be a little bit more than just being all blank here. Other expenses, likely a good chunk of that would also be in column D, which is for charitable purposes. But we don't see that here. And as we come down, typically you're going to see that this number paints over, and this in the fair market value C column is going to be the same for the cash. Other assets in a very round number is typically unusual. Liabilities, not, and especially in this early stage foundation, not necessarily a good thing to see. See that they are on the 958, that they follow it. They really probably, the answer is they probably don't follow it, but they check that box anyways. And as we come down, we didn't have any information there, so we shouldn't have any information there. Getting into our yeses and nos. Number 6 here, this almost always should be yes, either from the governing instrument, meaning the articles of incorporation or the trust document, or the state has that language in their legislation, which a lot of states do. So this likely should say yes. The foundation did in fact have more than 5,000. So line 7 is yes. As you can see, state is missing, but apparently they gave a copy to the Attorney General. No. Everything else here is pretty good. We do have here, sorry, Ryan. My guess is that's his personal address. Shouldn't be there. There should be a minimum investment return. So it did say there was cash. And so on line 1B here, we do need to average monthly cash balances, which would create our minimum investment return, which would in turn create our distributable amount. And we don't have any qualifying distributions. So that distributable amount would mean that we have a carryover from this tax year to the next tax year for a distribution. We don't have the Schedule B, and so we don't have the person who became a substantial contributor. As we come down, there's really no schedules or anything. Not great. And this return, if it were to be audited, would be considered non-filed for a multitude of reasons. And like I said, by and large, this is happening a lot. And it's quite simply because accountants rarely see the 990PF tax return. They're so used to the 1040s and 1065s and 1120s and things like that, where there's only about 100,000 private foundations in the country. There's 1.85 million public charities. You just look at the demographic of returns or exempt organization returns. The private foundation makes up a very small subset of that. There's 140 some million tax returns that are done every year, and that may just be individual tax returns, not alone business returns and things like that. If you look at 100,000 private foundations and there being 850,000 tax preparers, likely less than 12% of all tax preparers have ever seen a 990PF, let alone filed one. And I would argue with it being as niche as it is, probably even less than that. It's probably less than 5% of tax preparers have ever done a 990PF. And as we see, they probably aren't doing it correctly. And it's quite frankly because they don't have the education and they don't see them or do them often enough to put in the time and energy to learn how to do them properly. So those are the 10 mistakes, most common mistakes. We do see a lot more than that, but those are the most common. And again, keep in mind that the 990 PF is due on May 15th of each year. You can get an automatic 6-month extension out to November 15th, which in 2025 lands on a weekend, so it'll actually be November 17th. And I highly recommend that, number one, you review your 990 PFs from previous years to see if things are missing. And two, for this year and going forward, have a professional do your 990 PF so that you can avoid those costly fees. If you like this video or want us to do a review of your 990 PF, leave a comment, look in the description. As if you like this content, I'm going to be creating more educational videos all around private foundations. So stay tuned.